Hey, what's up guys? Welcome back to the channel. We are back on YouTube after a quick little break to talk about a stock that I honestly think has over 100% upside from here. But before we get into it, there are two key components that I just want you to keep in mind throughout the remainder of the video. So first off, it's still relatively new to the market because it just went public a couple months ago. So most people probably still don't even know about it. And two, it did just get caught up in a tornado in small cap stocks, or the Russell 2000, which is down almost 10% from its all-time high. So keep those two things in mind, but I'll go through exactly what this company is and what they do and why I think there's a lot of money to be made on the long side of this trade here. So please leave a thumbs up if you do find any value in this video. And if you haven't already, hit that subscribe button if you are new to the channel. So if you're thinking long-term, what is the first industry that comes to mind when you think about innovation or the future? Probably EV or electric vehicles. And these stocks are at the top of everybody's list, right? Everybody knows about Tesla or NIO or Lucid Motors or even all of the companies that have been around for a while that are just starting to make electric vehicles like GM. So it's always electric vehicles, right? It's always the electric car makers that everybody knows, but I never see people talking about electric aircrafts, and that's probably because most people don't even know that that's a thing yet. So that's what I'm going to be talking about today because I think this market is going to be absolutely massive, and I believe that this stock that I'm going to be highlighting today is going to be one of the big winners. So the company is BLDE Air Mobility, which trades under ticker symbol BDLE for just under $9 a share. And a few months ago, I talked about this stock very briefly on the channel when it was still a SPAC, but now they're a real company. The ticker has changed. They report earnings just like anybody else would. So all those negative feelings about SPACs should be completely out of the picture now. But since they did just come into the market, they still have yet to really report any significant earnings. As a public company, they've only been on the market for 3 months, so they haven't really had the chance to come out and give real numbers and guide for the future, which is why it's still trading pretty much under the radar. And that means that nobody is really modeling them or aggressively trading them yet because they're still just grouped in with all these new SPAC IPOs that are essentially just story stocks until they prove otherwise. And this is really where a lot of opportunity is in the market for us retail investors because we have the ability to go out and research and buy stocks like this before they get into the benchmarks and before all the big institutions and hedge funds pick them up. All right, so a little bit on what this company does. So they're a private air carrier that focuses on affordable travel in and out of urban areas that are generally extremely difficult to get around in. They're based in New York City and they have private planes and helicopters where you can book seats on either a scheduled flight or you can just charter an entire flight to take you pretty much anywhere in the world. But right now, one of their most popular options, which is also probably one of the most cost-effective for the company, is their airport flight where you can fly from Manhattan to any area airport in just 5 minutes. Now, I don't know if you've ever been to New York, but this 5-minute flight would probably take hours if you were to take an Uber or taxi and cost pretty much around the same price. So that's kind of the main point of their business. They want to take trips that are generally very lengthy and just annoying to make them easy and affordable to travel in and out of the most congested areas. Now back to the electric aircraft part of the story. BLDE is the first company to 100% commit to EVAs or electric vertical aircrafts that will make travel quick, quiet, and give off zero emissions. And this is the major edge that they're going to have over all of the competitors. Think about Tesla, for example. This was the first company to really dive into electric vehicles and is still one of the main components that really stands out amongst their competitors to this day. Even with all these other companies coming into the market, Tesla was the first, and they're always going to have that reputation of being, well, first, the most efficient, the most reliable, the safest, whatever it might be. And I think that BLDE is going to have that same type of reputation in the airspace. And I'm not saying they're going to be the next Tesla. They're in two completely different markets, but I am saying that being the first is going to stand out for them. And especially when we're talking about electric aircraft, which is potentially going to change the way that we think about flying. So that's going to go a long way. And these EVAs or eVTOLs, which stands for electric vertical takeoff and landing, are pretty cool. This type of plane, or whatever you want to call it, has the ability to take off and land like a helicopter by just going straight up and down and essentially hovering in any space that they want to come down in. Then once they take off, they fly just like a normal plane. So this type of design allows them to fly distance just like any plane would, and then take off and land in spots that pretty much any other aircraft is unable to. And this is really something that we've never seen before, and probably something that is going to change the game for urban travel moving forward. All right, so what's the timeline around all of this? Well, a few months ago, Blade officially secured up to 20 EVAs for delivery by 2024, making them the first operators to receive a passenger configured aircraft. And in the meantime, Blade is obviously still running business as usual, but they're also working on just expanding across the US to lock down some more locations for their EVA travel. And as I mentioned, they have multiple locations already in New York City, but Los Angeles is also going to be a huge player here because they recently just announced their urban air mobility partnership, which is absolutely going to help shape LA as a key player in this EV mobility race. LA is by far one of the most difficult places to get around in with the traffic that they have to deal with on a daily basis. So Blade is looking to connect all of greater Los Angeles by air to make that interstate travel much more efficient. So they clearly have a lot in the works, and this is an industry that we've already seen boom with electric cars. We all know how successful EVs are. So you're probably thinking, if this stock has so much potential, why isn't it already trading much higher than where it currently sits, under $9 a share? So this is where I'll refer back to those 2 points that I made at the beginning of the video, where first off, the company has been on the market for less than 3 months, which means they haven't really even had the chance to report earnings as a public company. And second, the Russell 2000 just crashed over 10% in less than a month. And it doesn't matter what type of stock it is, it doesn't matter how good the company's outlook is. If the Russell 2000 crashes 10% and you have a small cap stock with a high beta that trades like Blade, there is almost 100% chance that that stock is going to get completely annihilated. When you see stocks like Blade sell off 30% or sometimes even a lot more than that in just a couple weeks, it usually doesn't have anything to do with the fundamentals of the business, especially when it's all happening together, when all small caps are just selling off. It's mainly because this is a factor exposure in the market that just completely implodes once it starts to get hit hard and once all the hedge funds and institutional investors start to unload at the same time. You have to remember the amount of automated or algorithmic trading that happens in the market literally every single day. So small caps, especially those that are still new, that came into the market through a SPAC, are absolutely going to get dumped in size as all of the big money players see that factor exposure start to unwind, and then it all at once just starts to break apart. The reason this happens is because a good amount of hedge funds have to run neutral to the market, meaning that they're always adjusting their long and short books to stay hedged. So when volatility picks up in small cap stocks, they have to protect themselves, and a lot of the times it happens all at once. So you got to think, in that scenario, what are they going to sell? Are they going to sell their mega cap tech stocks like Apple or Facebook or Microsoft, Amazon, whatever it is? Or are they going to sell the small cap SPAC stock that might have a good story to go along with it, but still nobody really knows? So as retail investors who are not forced to degross their portfolio whenever certain areas of the market explode, this is a huge opportunity. And if you can find high quality companies that are getting whipped around by the hedge fund community and you can handle some volatility, then there is a massive amount of upside. And a stock like this could very well be up 20% or more on literally any given day if the volume starts to flow in. So oftentimes what we'll see is these small cap factor exposures completely flush out in a matter of weeks and then start to gain some serious momentum to the upside once they report earnings and once they start to get picked up by all of the big analysts on Wall Street. Once more people start to cover these kinds of stocks, it then turns into an event where all the people who were dumping their shares to protect themselves suddenly need to own it because it's introduced to the benchmarks, which then means that they can't run the risk of missing out on a new stock. So that's how I see it right now. But when you're looking for longer term plays like this in general, you kind of just have to know exactly what you're getting into and realize that it might take some time to gain some serious traction, especially during these volatile periods. But at the same time, you need to be aware of what's really happening and why are these stocks going down at once? Is it because of the fundamentals, or is it because of what I just explained earlier and just machines just selling all of these stocks at the same time just because it's a factor exposure that's starting to unwind? But if you guys have any other thoughts on this, or you have some stocks in mind that you think fit the same description as this one, definitely let me know in the comments below. I want to go through all of them and check all of them out. But thank you for watching all the way through. Hit that like button if you did find any value throughout the video, and if you haven't already, hit that subscribe button, and I'll see you guys next time. Peace.